In this video, we're just going to go over the closing entries, but specifically for a merchandising company. So we've already covered the closing entries previously for a service revenue company, so this will just be a quick recap and a reminder to not forget your new temporary accounts relating to merchandisers. So again, what is the closing process? The goal or objective is to update your capital account through the closing of all of your temporary accounts. So let's start with closing entry number 1. Closing entry number 1 is to close our revenues to that income summary account. Remember, revenues have credit balances, so we would close them with debits. So in the case of our service revenue company that we already had before, we would also have to close that with a debit if we again still had service revenue. And now we have our new sales revenue account. So there we go. Step 1, we've now closed all of our revenues into our income summary account. In step 2, we originally said to close our expenses into our income summary account. And all we're going to have to remember is that we do have a couple of new expenses, but we are also going to close our contra revenues in this example. So our contra revenues have debit balances along with our expenses. And so they will be, again, all credited to close them out. In this example, we have our closure sales returns and allowance contra revenue account, closure sales discounts contra revenue account, closure new cost of goods sold expense that it doesn't have the word expense on the end, closure new transportation, delivery, or shipping expense account if you ship your goods as the seller, and then all of your other expenses like wages, rent, utilities, miscellaneous, all that other ones we had. To keep this short, I didn't list those all, but you would list them all out. Now we are on to step 3. Step 3 is where we are closing our income summary account into our capital account. Notice we're not closing our capital account, we're closing our income summary balance. And this amount is why I keep putting it as big red question marks, because it still continues to be a troubling spot for students. So you will notice I put my little income summary T account down here. In our closing entry number 1, we credited the income summary account for the total amount of all the revenues we had. And in closing entry number 2, when we closed the expenses and contra revenues, by the way, just ran out of room there, we debited it. In the case of net income, so if you had a net income, your revenues number would be greater than your expenses number, and the balance that you calculate would be over here on the credit side. Therefore, to close it for closing entry number 3, we would need to debit the income summary account for the difference between those two numbers that are in income summary in closing entries 1 and 2. That will then close the income summary account. It now has a 0 balance. And because net income adds to capital, we would credit the capital account. Let's go on and continue for just a minute with the our 4th closing entry, which is to close our 3rd type of a temporary account. So here we go. We need to close the withdrawals account. The withdrawals account has a debit balance, so it would be closed with a credit, and obviously would be debiting capital here to reduce the capital account for the amount of the withdrawals. So in the case of net income, you have debited, let me say that again, you debited the income summary account. When you credited the capital account, you added the net income amount to your capital account. And when you closed the withdrawals account, you debited the capital account to close the withdrawals into the capital. So through the process of closing entries 3 and 4, we have updated the capital account. Now, let's look at what would happen if your revenues were not greater than your expenses. If your revenue amount in closing entry number 1 was smaller than your expenses, you would have a net loss. In the case of a net loss, your balance in the income summary account is on the debit side, and you would have to close it with a credit. So the only closing entry that can possibly be changed is closing entry number 3 is flipped in the case of a net loss. In the case of a net loss, we need a credit to the income summary account to close it and a debit to the capital account, which also makes sense because a net loss decreases the owner's capital. And that's a quick video on closing entries for a merchandiser.